Good evening, everybody. Hope that you are very well, and welcome to this evening's Contenders live stream, where I've got a really interesting one for you all this evening. I truly believe that this is going to be up there with like one of the best streams in terms of your viewpoint of the market and how it's going to have changed by the end of tonight's live stream. I truly believe you will view the markets in a totally different way for the better. So this is a really important live stream. It's not actually so much, well, it's not focused on the technical analysis per se, but it's focused on how we actually come to trade well. What's the thought processes, and how do we reach the stage of actually making a trading strategy? Okay, so that's what we're going to be covering in tonight's live stream, and it is massively important, this one more so than any others, that you turn off all the distractions around you. You know, turn off the Bitcoin chart, turn off the altcoin charts, turn off YouTube, turn off everything else, and just concentrate on this live stream. Make some notes. Should you have any questions, you know, save them till the end of the live stream. Again, all the questions that you should have should be directly related to this stream, not any random sort of off-topic questions. But directly related to this stream, we'll be more than happy to take that towards the end of the stream tonight. So I hope that you're doing all very well. I've obviously had some really nice trades over the past week on Bitcoin. And the altcoins alike, to be fair. The altcoins have done pretty well as well. And now we're going to just give our focus to the stream. Not worry so much about Bitcoin. I'll cover, I'm sure, Bitcoin towards the end of the stream for you all. Yeah, so I hope that you enjoy, really. So as always, the disclaimer, I'm sure you've all read this one by now. If you haven't, you can pause and make sure you understand there's obviously no financial advice. So in tonight's live stream, what I want to be going over is chart of the week, but I think I might end with this. I think I'm going to approach this in a slightly different way and end with chart of the week. Well, let me just make sure everyone can actually hear this okay. Everything looks good. Sound okay. Thank you, Technic. I just had that feeling just then. I better check. Oh yeah, so chart of the week. Probably going to end with it this time, okay? I think it makes slightly more sense to end with that. Then I want to go over like the psychology. So this is like a mixture of things. It's like the psychology, getting to the strategy, and just how you approach trading. This is probably like the part 3 and probably the last part I'm going to do on this for a very long time. But that's what we're going to be going over as the main bread and butter of tonight's stream. And then obviously ending with the questions. So that's what we got planned for tonight. I will probably go over Bitcoin towards the end. Obviously it's currently at the VWAP resistance, so it's nothing like major at the moment, but the thing that you need to be aware of, obviously, just so we just quickly covered, is we obviously just taken this last high, you're up at the VWAP resistance, so that's the resistance you're at the moment. But we'll go over this in a bit more depth towards the end of the stream. My stream tonight is actually really influenced and inspired almost by Mark Douglas. So I've taken a lot of key points from Mark Douglas. So like, he's a trader. I totally all recommend to you. Obviously he's dead now, unfortunately, but like he still has trading books and material, and so I've taken a lot of inspiration from him, and he's a trader that I really admire and think you know, was one of the best. So yeah, I've taken a lot of influence from him in tonight's stream as well. I do recommend that you know, admire him too, I suppose. But yeah, to begin then, trading psychology, that's what we're going to be going over today. So these are the main points I want to go over. I want to go over working out that trading strategy. So for example, we at Chart Champions are taking a lot of, you know, Fibonacci work. We really like the Fibonacci, really like the harmonic, and obviously just the I suppose, what's the right word for this? The approach of trading a ranging market. Okay, we are some of the best range traders, I believe, maybe in the world. Trading ranges is an absolute joy, and this is obviously a strategy that we have pretty well developed in terms of when we come down to the lows. We're obviously looking at our volume, our delta. You know, we can start adding CVD divergences. Obviously, we can trade everything really, but you know, basically trading strategy is important. Understand and accept the risk on every trade that we take. This is the next section that we'll be looking at. And then we're going to be going over how to stick to the plan and remove the emotions. And the last part that I've put in here is I've put the title, I have not listed it on this screen, but I've listed the title as Secrets to Trading. So what are some of the secrets, quote unquote secrets, that actually separate the good from the excellent. Okay, I truly feel this is a massively important stream for you all. So let's begin. So the first over here, I've started with do you. So these are questions you can ask yourself. So do you second guess yourself when entering trades? Do you have fear during the trade? Or do you not stick to your original plan of the trade? I suppose a fourth one that I could add in here potentially is, do you even have a plan? do you even have a plan when you're entering the trades? Or are you buying as prices going up, thinking I got to buy because it's going to keep going and I'm going to miss out? Or do you end up, prices going down and you're just running into shorts at the low of the move, thinking, oh God, it's going to crash and I'm not in a short, So that could be the fourth thing. Like, do you actually have a strategy that you're trading off of? Surprisingly enough, a lot of people don't. And then you start to think, oh, it's actually not that surprising that 95% of traders lose money when they don't even have the plans. But obviously, I like to think that a lot of people here, you've taken the first step of acknowledging there's a problem. You've taken that first step of joining, the contender or champions section where you've started to learn and you've put in that initial effort, which is obviously a great first step. So moving here, what I want to start with here is the main section of accepting and understanding and then actually accepting the risk. So what do we mean by this? So what I'm saying is people accept they can lose, but they do not accept the risk. So I think when everybody starts trading, everybody accepts, oh yeah, I can lose this trade. Absolutely. I can lose this trade, but they don't actually accept the risk of losing the trade. And I'm going to expand upon this in a second. There's a big difference between the understanding of the risk. Yeah, you can lose, but do you actually accept that you can take that trade? Or once you enter that trade, are you starting to feel, oh my God, I shouldn't have entered that trade? You obviously are too scared to lose the money that you've placed on it. For example, you take a long trade with a stop loss and set a take profit. Each downward move causes fear, and I'm going to expand upon this in the next picture. So let's say, for example, price has moved up here. So if we enter a long position at resistance, so we got a move up, and this was literally yesterday on the Bitcoin chart. I love how this example's ended, by the way. It's more than I could have asked for. We got a move up yesterday on Bitcoin, and we spent a little bit of time at the highs. So what do you know? A lot of people, they're going to be FOMOing into the longs up at the high, unfortunately. But then what happens here? They at the time, there's been a big move to the upside. There's been a bit of consolidation. They might be thinking a bull flag. They take their long position. Okay. And then there is a clear market structure change. So you see, after we've taken that high, we've then put in a low, put in a lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. And we're all the way back to the start of the pump. Okay. There is a clear market structure change, but you hold on to the long. Why are we holding on to the long? What's the emotions that we're feeling on each of these ticks? So this was literally yesterday on Bitcoin. There was a move up to the high of the range, around that $38,000 level. And let's just say, for example, you've taken a long. I'm sure everybody's been in this situation where you take a long in a bad place, and the market actually starts to go down. And maybe you would have thought to yourself, I'm going to get out if it goes below this point. But then price goes below the point and it starts to tick up again. And what you're going to start saying to yourself is, although you've actually said to yourself, I'm going to close if price goes below this wick. Let's say we enter the market here. We say to ourselves, I'm going to close the trade if it goes below here. And then price goes below the level, but really quickly back above. And then you say to yourself, well, you know what? Maybe we've seen a swing failure pattern of the low. I'm not going to close the long yet. And then minutes later, you see price go down once more. And you say to yourself, well, I might close, but then you see the green tick. And then price goes down again. You're starting to feel, oh my God, I should have closed it up here. Why am I still in the position? But then you start to get the green ticks. And so on every uptick, on every bit of the market going up, you start to feel, okay, this is it. The market's turning around now. I'm just going to get out the trade at break even. But then the market falls down again. And you start to feel, oh my, why am I still in this position? I should have been out of it an hour ago. Why did I not place a stop loss? Why did I not stick to the plan? Market upticks again. And you think, oh, thank God I can finally hopefully get out of this position at break even. Just get me back up to entry and I'll get out the trade at break even. Price goes down again. And you're just left in the spiral of, why did I not just close the trade when price went below my entry? My invalidation. Why did I not get out here? Instead of thinking, oh, it's a swing failure pattern. 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 And then you find yourself massively underwater. Well, the answer, the real answer is, obviously, they basically have not accepted the risk in the trade. So if you've entered the trade under the acknowledgement of, I have got my invalidation here, I know that I'm wrong here, you got to get out of the trade when that happens. And if you start to fall in the trap of, oh, it's a swing failure pattern, it's a swing failure pattern, or X, Y, and Z reasons to hold on to it, and every uptick you start to feel that, oh, finally I can get out at break even. But what's actually happening here is you're basically, this is the result, by the way. This was the first section here, and look how it ended. And as we all know, we actually went down even lower than this. We went down even lower. But you can see how you could have been blinded by holding the long, which is crazy. Like, oh, it's a swing fight, and holding it. And this is the result. You would have been maybe liquidated, blowing up the accounts because of your unwillingness to close the position when you should have. And you could have actually even taken the short. Okay, what did you have here? You had to move up into resistance. You have a market structure change. This is a short all day long. Like that has to be a short position. This is the result, literally today on Bitcoin. If one had simply read correctly the market structure change that we had there with our lower highs and lower lows, you should have at least closed that long, or better yet, enter a short position. Because this has been a clear market structure change. There's no reason to hold on to it. You're literally up at the high of the range. And people will get into this position where they've literally held into a long, formed a high all the way down. That was over 12% to the downside. That's going to hurt. A little bit of a nice one, but this was obviously the trade that I took today off of that. Well, it's actually from last night, that short position. But yeah, literally made, in the end, this was about $95,000 on the short position from really simply trading that range. I knew we were up at the higher range, zero emotion, just trading the charts. This is what we're going to move on to. Obviously, we got some slides left of this stream, and what we're going to emphasize here is how was I approaching this in a totally non-emotional way. Again, trading over $1 million, seeing really, really nice profits, but also that can hurt people. Seeing the profits sometimes hurts people, and I'll explain that as well. Well, let me explain this now, I suppose. Why does seeing the profits hurt people? Because actually people can get into the situation of this. So that, my short was a pretty nice entry. And obviously I'm seeing in my instance, 90 grand profit. I guess this is a little bit, not many people are going to see this in their every day. This is literally 12 hours of trading. But let's say for you, I don't know, $900 is like a really lot of money. Whatever it is, maybe it's just $90, but whatever. You can be in a really nice position. And here there's no reason to close out of the short, is there? So let's take the example then that I shorted the high. And then I'm seeing a really nice market structure change. Price comes down. It's literally so easy short this was. Everything lower high, lower low. You couldn't have got an easier trade. Lower high, lower low, 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 lower high. It's continued all day. But what do some people do? They get in a really nice short position. But let's say price come down to here. And then market starts to uptick. And then you'll start to get into the situation of, oh, I'm in a really nice position, but I'm now so scared of my winning trade turning to a loss that you close the trade way too early. I'm sure this happens to a lot of people, as it's common that you're literally in an amazing trade and you end up closing the trade for $10 profit when you should have had $100 profit. And why were you closing the trade too early? Just like the guy that's in a long, and every uptick he was thinking, it's coming back to break even, it's coming back to break even, it's coming back to break even. Every uptick he's feeling very well. The same if you're in a short position here. Well, every uptick you're going to start thinking, all right, this is it, it's going to come against me. The market's going to turn it against me. I'm going to throw away profits. I need to protect my profits. But actually that's detrimental. So by focusing so much on that P&L, by literally seeing that high number, and some people are going to be like, wow, this is so much profit, I literally just cannot lose this much profit. They'll end up closing their trade way too early from the fear of losing money, or quote unquote losing money, of seeing profits turn to a loss. That traumatized almost by, I cannot have this turn to a loss. Let's move the stop loss to break even. Let's move the stop loss down. Let's move the stop loss down, where there's no need to move the stop loss down. Even if you're just trading above these highs, for example, you literally would have captured the whole of the move. But people are going to be fantasizing on the 1 minute of these upticks here, these upticks here, these upticks here. Think, right, this is going to be it. This is it, where it's reversing. Because if you trade it in a very systematic way, there was no sign of a reversal over the past 12 hours. And obviously that ended in a very nice trade. Yeah, so that's the thing that I'd add there. But this is the biggest thing for me. So this is the biggest thing that I really feel is of the utmost importance. Like, this is so crucial to get into this thought process of trading. And that is, I can lose any trade I take. So e.g., every single trade that I can take, I can lose, and I accept that. I actually accept the risk. I know how much I'm risking before I enter the trade, and I fully accept on this trade, I can lose $20,000, and I'm absolutely fine with that, because I know if I cannot risk 20,000, I didn't deserve to make $90,000 today, because I hadn't accepted I can't accept the wins if I can't accept my losses. So all it takes is one other person to invalidate my trade. And I love this story so much. I have told this story in a prior stream before, but we'll just emphasize it here one more time. So every single trade I take, I 100% know I can lose that trade. Even if I have spent hours upon hours upon hours doing my best technical analysis, I still know I can lose that trade. So I've still got an invalidation of my trade. I still know where I'm wrong before I enter that trade, because literally all it takes is for one other person to think different than me, and that trade's invalidated. Obviously, we're under the perspective here of that one other person is a market maker. If they want to send the market different than what we're thinking, all it takes is that one person with a big enough capital to literally change the whole of the market. So when we realize actually all it takes is one other person to think differently than us, and that invalidates our trade, well, we're going to start to think to ourselves, okay, we need to actually accept this risk. We need to put on our stop losses, and we need to get out when we're wrong. So I'm trading the probabilities, and what I'm giving, I want to move on to a weighted coin example. So for example, we are trading a probabilistic edge. So let's say we are trading the retracements to the CC in an uptrend, and we're looking to buy the CC when it hits the VWAP, for an example, in the uptrends. And we can say, let's say we have a weighted coin. We have a coin that's weighted to heads 70% of the time. Well, you're not going to bet your life savings that it comes up on heads, because there's a 30% chance that you can lose. But what you could say is you're more than willing to take the risk over a course of 50 coin flips, because more often than not, if you keep betting on heads when it's weighted to heads of a 70% chance, more often than not you're going to win. But you never ever know whether the next coin flip is going to be heads or it's going to be tails. You can say it's more likely to be heads, but you never know with 100% certainty that it would be heads. And that's why you wouldn't go into a Russian roulette and have that bullet with the potential chance of, I don't think many people would anyway, with the potential chance of dying. And the same is the same thought process as in trading. We can have a 70% odds of winning the next trade, but we never ever know whether that next trade is a winner or it's a loser. It's absolutely impossible to know whether our next trade is a winner or a loser, but it does not matter. It does not matter whether our next trade is a winner or a loser, because we are going to be approaching every trade in a way of, well, I want to move on to the example that I've got here, and I think I'll come back and expand upon this. But basically, we're going to be the casino owning the slot machines. And I'm going to come back to this in a second. I want to move on to this next section, which is this trading strategy. And I'll return to that in a second. But basically, so this is how we're going to start to get this probabilistic edge. So how are we going to get our edge in trading? How do we go about getting the strategy and the edge? Okay. So this is what you're going to be needing to do. Decide the setup that you're going to take for the next 25 trades and take that setup every time. So what I mean is this is honestly so serious. This is really, really, really serious and so important for you. I'm doing this in the best way that I truly, honestly believe you need to do this if you're going to take it. If you're going to take trading seriously, you need to do this. Decide how you're going to take the trade. So obviously you might have to go through all of the Contenders videos first. But let's say you've watched all the videos and you have a really good understanding now of the charts. And now you're going to have to make the decision of, okay, off of these tools, a trading strategy. So for an example, in an uptrend, you're going to buy every CC retracement and the VWAP. It could be something as simple as that. Okay, but you're going to have to make a criteria. And then you're only, for the next 25 trades, do not take anything else. If your criteria is CC at the VWAP, only take that trade. And if that trade does not come up, do not take a trade. Doesn't matter if I'm in the group saying I'm going long. Doesn't matter if someone else is in the group saying they're going long. If you do not hit this criteria, you do not take the trade. You have to block out everything else. You have to do it. And if you're going to take this seriously, you're going to do this. If you're not going to take this seriously, ultimately, I think you're going to fail. So you must take this challenge very seriously. Make a rule set for yourself, and it can be something very, 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 very simple. We're not after the complexity at the moment, but you're going to have to make this very simple. I'm going to enter when price does this. For example, I'm going to buy at the CC retracement with the VWAP. My stop loss is going to be at the lows, the low of the move where I've pulled the fibs from, and my target's going to be a negative 618 extent, a negative 618 Fibonacci. Something as simple as that. That's giving you a very easy setup that you can replicate over time of the entry, the stop loss, and the target. But what you're going to do on this is what I would say. On each trade, only use $1 and record each trade result. What went well and what could be improved. You might be sat here thinking, Daniel, why would I only trade $1? Well, this is where a lot of people struggle. People are going to be okay, I think, with this trading the $1. But what you're going to find is if you start to do this straight away with $1,000 or $100,000 or $1 million, you might start to doubt yourself, take the trade and then immediately thinking, oh my, I don't actually, this is a bit too much. All the thought processes that start going through your head. You basically are going to take $1 trades for the next 25 trades. And I think if you cannot make it through the 25 trades with using the $1, I don't think you're going to be able to do it with $1,000 or $10,000, because you need to get this discipline, first of all, to just have the discipline of for the next 25 trades, take only the setup that you've preset and only use $1 on that trade. Why are we doing this as a challenge? Well, the challenge here is really so you can prove to yourself after 25 trades of trading $1. If you're walking away with a 70% win rate, there is no reason why you cannot do that when you up this to $10,000. But what you're going to find is there's a massive psychological barrier for a lot of people. They can trade well on paper, they can trade well with $1, but straight away people will come in to start trading. They'll throw 10 grand on every trade. They'll throw 100 grand on every trade, and they trade really poorly. The upticks, they feel really happy. The downticks, they feel, great sadness. And the cycle is just always going to be repeating. But if you can prove to yourself that with $1 you can do it, there's no reason why you can't do this with $100,000, $10,000, But what you might find is that when you are increasing your size, that you're going to start closing out a little bit early. You're going to move up that stop loss a bit too quick. And if that's the case, go back to $1. And until you can complete this process each time, find out where your personal risk tolerance is. Maybe you cannot trade with more than $1 million because it just becomes too psychologically much. Maybe you can't trade with, a certain amount, and then it just gets literally too much for you. So you've got to try and work out where that is. But what you're doing here is you're going to approach this with the $1 thinking of, I don't care if I lose $1. I don't mean many people are going to really care about losing the $1, but that's how you should be approaching every single trade, because if you know every single trade that you can take can end in a win or a loss, we are accepting the risk that we can lose that $1. And if you lose that trade, you're not going to be beating yourself up about it. So obviously what you're going to do with this sort of process is at the end of the 25 trades, you're going to see your win percentage and any adjustments that need to be made. So basically what I'm saying is go through your 25 trades with the same setup every time, use $1 at that trade, see your win percentage at the end of the process, and then say to yourself, okay, what could have I improved on this? So every time that you've taken that trade, you are going to be recording what went well and what could be improved. And then at the end of the data set, you're going to say to yourself, okay, could have I improved, on each trade? If I kept getting stopped out a bit too early, could I do something to adjust the stop loss? If I was taking profits too early, is there something I could do to adjust the take profit target? Could have I done something to adjust my entry slightly? You're going to actually have some data. And how do you have confidence in trading, or how do I get my confidence in trading? It's because I have a really defined criteria that I'm going to be trading from. I'm not emotional. I think this is probably the biggest thing that does separate me from a lot of traders, that I have no emotion when it comes to the trades. I'm very robotic in that regards, that I don't mind if I lose the trade. I don't mind if I win the trade, because I know I'm approaching this in a very systematic way. And how do you get to that systematic, robotic, almost way of just trading? It is from proving to yourself that you can do it and not having those emotions that run through you, the emotions that are running through everybody. And this is where I'm going to go back to the casino. And this is the great Mark Douglas example. So shout out to him once more, because I absolutely love the example. And that is, we are the casino. So imagine, in technical analysis, we have a probabilistic edge. So let's say that we are trading a certain criteria, and we know after running through the 25 trades, we can say to ourselves, okay, we actually have an 85% win rate on this trade. So we have a very big chance of winning the majority of our trades, 85% win rate. So we're almost we are the casino in the market here. But what does a casino do? They know that people are going to be, let's say they're on the slot machines. People are putting in their dollar and doing the slot machines. Of course, the casino knows that they don't have a 100% win rate. They know that at times people are going to, win and take their money. But over a particular data set, over the whole course of a week, the casino is going to be walking away with money. And the same is with trading. We do not know whether we're going to win or lose the next trade. But if we start to approach trading in a probabilistic manner of, okay, I do not know if I'm going to win or I'm going to lose my next trade, but I do know if I take this trade over the next 25 trades, I am going to be walking away with more money than I lose. So we've got to say to ourselves, okay, we'll enter every trade with the same criteria. We know that for this trade, we are risking $1 to win $3. And we also know that over a string of trades, we are having a 85% win rate. You're going to start to say to yourself, if you take a loss, because how many times are you going to do this to yourself? Let's say that you don't have this edge at the moment. You don't have this strategy at the moment, and you take a loss. You might be thinking, okay, it's a loss, so I'll take the next trade. You take the next trade, it's another loss. And then you take another one, it's another loss. You take another one, it's another loss. If you take 4 losses in a row, how are you going to start to feel? Just think to yourself right now, if you took 4 losses in a row, how are you going to be feeling? Is it going to affect you on that 5th trade? On that 5th trade, are you going to start saying to yourself, oh, maybe this isn't working. Maybe I need to change something. Maybe I need to change my strategy. You're going to start doubting yourself, really, aren't you? You're going to doubt yourself. What would I do? And you have to remember, I can take 4 losses in a row. That's absolutely 100% can happen. I literally could take 4 losses in a row. But what am I going to do? I'm going to take the 5th trade, the exact same process as I have the last 4 trades. I'm not going to start changing something. I'm not going to start doubting myself. I'm going to be like, okay, let's take the next trade, because I am approaching this of thinking, okay, over the next 25 trades, it's very, very, very unlikely that I'm going to be going loss. Suppose if I come out of 25 trades and everything was a loss, then I'm going to have to say to myself, okay, my edge in the market has got something wrong with it. Let's take a look into this. But that would be at the end of my data set, not halfway through, not after 5 trades, not after 10 trades, after 25 trades of it. We're going to be starting to say to ourselves, okay, something's gone a little bit wrong here. But we're going to be approaching this every trade that we take. This is the mindset that we're going to be in. We're going to be trading every trade from the mindset that we're at the casino. We have the probabilistic edges in our favor, and we do not know whether we win or lose the next trade. Literally, we don't know. So this comes to like the secret of trading, and that is a few points here. Firstly, that no man ever reached excellence in any one art or profession without having passed through the slow and painful process of study and preparation. So really point number one is you cannot just arrive to this trading strategy. You cannot arrive to this edge in trading with a high percentage of win rate if you do not go through any sort of pain to get to that moment. If you haven't gone through the hard work to actually get to this strategy, you cannot just magic this up. You literally cannot just magic it up. The same goes for following. Like, I want you to think of something here. How many of you, being honest to yourself, have started to trade? You started to trade with no indicators, and then you've started to think to yourself, "Oh man, you know," and you've started to lose some trades, and you're like, "Oh, I need some indicator here." So you go onto Google, you know what's the best indicator for trading? It comes up MACD. So you start trading MACD. You start taking some losses. You're like, "Oh, I need something else." You add in your RSI. You keep taking some losses. You're like, "Oh man, like what's going wrong here? I must need another indicator to help me." You go out. Some I've seen at the moment, Market Cipher. I've seen this super trend indicator thing, and these are then indicators now that you're starting to pay for. So you're paying $1,000 a month for this indicator because you're thinking to yourself, this has got to work, and there's got this has to work. This has to work. But think to yourself, why is everybody going through this process of adding an indicator, adding an indicator, adding an indicator? People are adding on the indicators to try and erase losses. They think that there's a way in trading to get to a level where you're not going to be taking losses. So they're going to be adding on this indicator in the hope that it's going to make them not lose. But if you actually acknowledge it is impossible for that to happen, it is literally impossible for that to happen, you're going to start accepting the risk, aren't you? You're not going to be searching for all these magic indicators because no magic indicator exists. There is no way to avoid losses in trading, period. There is no way, because all it takes is one other person to think differently than you and the trade can be invalidated. So there's no indicator in the world that is going to know that literally one other person at that time wants to sell when you've worked out an amazing buy, and they're trading with $20 billion and they market buy and price goes up just as you are entering your amazing short position. You do not know that, and no indicator in the world can know that. So when you start to acknowledge, okay, I'm going to take this trade based off of X, Y, and Z, and I know that I'm wrong at this level. When price hits that level, you get out of the trade and you say, okay, at this moment in time, the market wanted to do something a little bit different than what I was expecting. That's fine. Let's move on to the next trade, because I know statistically over time, I'm going to be winning more than I lose on this trade. But we never, ever, ever know that next trade is a winner or a loser. So what we're going to be doing with this, we're going to be trading without fear or overconfidence. Without the overconfidence of going on a 5-win streak and start to think, okay, I've taken 5 wins in a row. This is really, really, really good. I'm going to start increasing my position sizes. How many times have you done that? You start going on a really nice win streak and you've doubled your position size. You've tripled your position size. And then on that 6th trade, you lose all your profits. That's overconfidence, and that happens a lot. And obviously the fear is the process that I think a lot of people will experience. And this is the fear of taking the trade, the doubt in themselves, the closing out of the trade too early, the moving of the stop losses, the holding on to the positions. I suppose this falls under the fear. You're scared of losing money. But every uptick you feel, oh, I'm going to get out break even. I'm going to get out break even, and you end up holding it for disastrous losses. So how do you get past this? Well, obviously it's getting through that process, and literally the only way you're going to do this is with the strategy. But really, what you're going to have to do is, when you get a trade set up, stop overthinking it and think in a percentage over a series of trade perspectives. And this is truly the only way that you're going to be able to go to a professional level trader. It's the only way. When you stop thinking to yourself, I cannot lose this trade, and you start saying to yourself, I can 100% lose this trade. Literally, so every single trade I take, I know I can lose. I know I can lose the trade, because all it takes is one other person to invalidate my trade. All it takes is one other person to invalidate the trade, and suddenly I've taken a loss. But that's absolutely fine. It's absolutely fine to take that loss, because what I'm going to do is I'm just going to approach the next trade. I'm approaching this in the course of 25 trades. So if I'm taking a loss, it literally does not matter. It does not matter to me. I'm just going to take the next one. And I'm going to take the next one. I'm thinking about this in the string of those, literally the string of trades. So that is like, so just like, it's just so important to get into the mindset, of accepting the risk. If you are not able to accept the risk, it generally means you're trading with too much money. So if you are finding yourself closing out too early, if you are, not entering the trade from fear, it's 99% of the time that you're trading with too much money. And that's why when we do the exercise of using $1, you'll probably find yourself taking all the trades and holding them to target, because you're trading with $1. You don't mind if you lose it. So that's where you're going to have to, you're going to have to build this up again over time. This exercise might take you a month. It might take you 6 months. It might take you a year till you get to the stage of being able to say to yourself, okay, this is how much I can risk before it's too much for me. Or, this is before it, maybe even before you get up to the level of being able to find a working strategy, maybe that is taking you a year. That's absolutely fine. There's no rush. So you cannot compare yourself to other people, of course. But basically for me, this is the way that I will approach every trade. I will approach every trade with the thought process of, this trade I can lose. I'm accepting the risk. If it hits my invalidation, I'm out of the trade with no overthinking, not holding on to it. I'm not going to be thinking, oh, it's hit my invalidation, I'll hold on to it. Maybe it comes back up. Maybe it's a swing failure pattern here when I wasn't originally planning for that. Maybe it's a swing, maybe I'll just hold on. It's going to come back up. It's going to come back up. When I could have just got out of it and bought 20% lower and got back in with a much better entry. And I think that the biggest thing is that of this is literally just, it's just that simple. It's really, really, really simple, but it's like changes your whole thought process of every trade I can lose. There is no way that I can avoid losses. There is no way it's absolutely impossible. It's impossible to avoid losses. So we're not going to be spending hours upon hours upon hours researching the best indicator, because there isn't one. There isn't a best indicator. There's no way that we can avoid taking these losses. So when we actually truly accept that, it's not just watching this video and saying, yeah, I know, Daniel, everyone can take a loss, and ignoring what I've been talking about, but it's actually accepting on each trade that we take, we can lose the trade. We can lose every trade that we take. And we start to say to ourselves, but we are approaching this in a viewpoint of 25 trades. Then I think you're going to approach your viewpoint of the market is going to change to a viewpoint of that of a professional trader, really simply, because that's how we are approaching the markets. We're approaching the markets in a viewpoint of every trade that we take. We have acknowledged the risk. We know how much that we're going to lose before we even take the trade. So it's not like we're entering the trade and I'm thinking, oh, if it hits my stop loss, I might lose 1,000, I might lose 2,000, I might lose 3. I don't know how much actually I'm going to lose. Don't know how much I'm going to make. No, we've obviously gone through the process of working out how much we're going to lose before we take the trade. We've worked out how much we're going to win on the trade, and we've taken the trade. No emotion. It wins or it loses. It's as simple as that. If it loses, move on to the next one, because statistically speaking, we actually are going to be walking away with a lot more wins than we are losses. Okay. Any questions that you might have, please let me know. This was a really nice post from the Discord. What I'm going to say here is you can pause this. If this is too small of a text, the post is from the 29th of the 12th, so 29th of December 2020, and it's posted in the psychology channel. But if you just want to pause the screen and read this, or if it's a little bit too small, take a print screen or something. I'm not sure, but this was a pretty interesting post. A few, I'll talk about a few of the best points in here. So the best points for me on this one was, I would say, well, actually, I kind of like all my posts because they're all equally as important. I would just recommend actually just pause it and read through this in your own time. You don't need to pause it now, but this was a post I kind of recommend. but it's too long actually for me to read through all this in a time-consuming manner. So this is the 3 pointers here. We are the casino. We literally are the casino of the markets. We have the edges in our favor. We know that we're we're essentially pulling the lever on the slot machines, but we're just taking the trade and taking the trade, taking the trade and taking the trade. We know that there's going to be losers because it's impossible to win, but we know over the series of trades we're going to walk away with more than we lose. So losses are, we're the casino. Losses are expected, but over 100 trades we walk away with more money. Okay, so again, what we're shifting the mindset of might win, might, I don't know, how did we first approach the market when we first started? I suppose we're approaching the market in a way of thinking, I want to make money. I suppose people just think they start trading because they want to make money. And then the majority are going to lose money because they don't have the perspective of this is actually a serious profession. This is not a get-rich-quick scheme. There's not some magic indicator that you can just use and copy. There's no way to just copy somebody else's trades and make money. Even if I posted an entry and exit and a stop loss, the likelihood that you could copy the same trade as me and walk out successfully is extremely low. That's why I think signals are just not ever going to work for anybody, period, because you have to have the knowledge and understanding of why you entered, why you exited, and why the stop loss is there to know of early reversal signs, etc. But you got to approach like the main thing that I want you all to be trading in the same fashion of me is, why would we start holding on to losses? Why would we not trade our plans when we know where we're right, where we're wrong, where our target is? We are approaching every single trade in the mindset of this can lose. Like, this literally can lose. It takes one other person to think different than me in this trade and I'll lose the trade. So I want to get out of the trade. I want to get out if it's invalidated. I don't need to hold it for X, Y, and Z because I'm trading under a certain setup where the invalidation is there. And I know that with this certain setup, it has an 80% win rate. If I hold on to this, how am I going to take the next trade? I'm not, because I'm still stuck in this one. I need to get out the trade and take the next one where my edge and high probability trade is. Okay, so I hope that makes sense. So we'll have some questions now. If anybody has any questions, we'll go through those now. Just seeing if we got any questions coming through. And then I suppose we'll do we'll end with Bitcoin, see how that's going. So that's what we'll look towards. Should anybody have any questions? I think Victor and Mike are going to collect the questions. Might be that they've answered them all. I could see they're actually answering a lot of questions. So potentially they have. Thank you, was a Harrison guy, no homo. Thank you. But yeah, maybe they've answered all the questions. I'll give it 2 minutes and see if any come through. Ah, yeah, we've got some. Cool. Let's do this then. Or maybe they've answered them all. Don't look like there are many. There was no sign of reversal. When you showed yesterday's price action, please can you elaborate on how you start to see the market actually starting to turn, i.e. start of reversal? Really simple, actually, this one for me. You probably all saw, because you're in the group, how I approached that trade. So this is, I know it's a little bit of an Instagram post, but literally that example was, I was aware of the range high, was a range of the range low. I knew that I wanted to move up into the range high to take it all the way down to the lows. And that's exactly what we got, that high to the low. And obviously that's how the trade ended. But so to answer the question of what was the sign that it started to reverse, firstly, I had a plan that $38,000 I wanted to short. And it was really between 38,000. I would have shorted it happily. Would have shorted it to 38,000 to $39,000. That $1,000, if it had pushed up more, I would have actually continued to short it. But so really simply, let me go back over to the PowerPoint and let's go back to that example. how did I know that this was, or I guess I didn't know. So this is the thing that I'm trying to emphasize. I didn't know. There's no way that I could have known that this was 100% the top, because all of it would have taken, if I've shorted here and my stop loss is above the high, all of it would have taken is for a guy with $20 billion to market buy, and price would have instantly went up. You know, it would have instantly gone to $45,000 and I'd been stopped out of the trade. So I didn't know. There's no way that I could have known that price was going down, because all it takes is for one other trader to instantly invalidate my plan. But what I did know is I had a plan in the first place that we're going to be hitting around this $38,000, and I really, 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 really wanted to short it. And then I've seen price come up to 37,940, so just shy of my bigger target. And then I've started to see the low, the lower high, the lower low, the lower highs. So I've started to see the bearish market structure. Okay, you can start to see your bearish CVD divergences. So there's a lot of like reasons, okay, this actually has a strong likelihood. But then when you start to get that market structure change, well, obviously the odds are greatly increased. So point number one is I had a plan from days ago that I wanted to short 38 grand. And then it actually come up to where I wanted to short. I'm not going to start saying, oh, I don't want to short this anymore. No, I wanted to short it. I knew I wanted to short it. I would have happily shorted all the way to literally 39 grand. But yeah, so first of all, I had a plan. Second of all, I start to see a market structure change. Third of all, you can start to see bearish CVD. Fourth, we start to have literally the market structure change. And then it's just amazing how it ended up of this, which as we all know went down even further to the actual very low of our range. Let's just show you what it looks like now, I suppose. Yeah, we literally made it all the way. That was obviously our range high. That was our range low. And this was the that was the like the really cool thing about that obviously prediction that I done on this one, because we were predicting the highs and predicting the lows of that range. So when it came up to that range high, I was literally ready for it, because I wanted this rotation from the highs down to the lows, and we got it also perfectly, literally. But yeah, basically I was ready and waiting for it, I suppose, and then I just traded my plan. I had a stop loss where I was wrong. I knew where I was invalidated, so it become easy in that regards. Become very easy, pre-planned, ready for the trade. Yeah, as simple as that, really. And I think had a stop loss. I knew where I was wrong on the trade, and when I know where I'm wrong on the trade, everything becomes really easy, because I can start to say to myself, okay, if price goes above this, I'm wrong, and I'll get out. I'm not going to be annoyed about getting a loss. I'm not going to be happy about getting a loss. I'm just going to be like, I don't care, actually. I don't actually care if I take the loss, because that's just normal. It's just normal to take a loss. It's literally normal. If you're not taking losses, I'd say that's actually abnormal. Because it's impossible to win it's just impossible to win every trade. I suppose, yeah, that's kind of, wow, that's funny though. But we only had one question come in there then, so I guess that's good in the regards that I suppose everybody has fully understood what we wanted to go through here. Then I suppose I'll end with Bitcoin. So let's just get back to where we were. So yeah, we have the casino. Losses are expected. Over 100 trades, we walk away with more money. How do we get to that 100 trade mentality? We obviously have to get our trading strategy in place. And again, my kind of recommendation is that you take $1. You make a criteria that you're going to trade that $1 for 25 trades. You're not going to stop after 15 trades. You're not going to stop after 20 trades. You're going to stop after 25 trades. And then you're going to collect the results. What was the win rate? If you got a good win rate, and maybe there isn't too much to adjust, well done. You've actually just started your step becoming a very, very good trader. There's no reason why you cannot do this full time, because you'll have reached that level of consistency. Like, that's what you want in trading. It's consistency. It's not taking a massive win and then taking it's not taking 5 massive wins and then taking the 6th devastating loss that wipes out the account. That's what a lot of people will do. They'll go on a winning streak and then they'll lose it all. It's the consistency over time. You know, you're in this for the next 10 years. You're in this for the next 50 years, maybe. Why do you need the winner that, you know, you're not after this winner that changes your life in one trade. You know, it's very unlikely that you're going to take a one winner that changes your life and then you don't blow it all up through greed and think, oh, I'll take another trade. You know, what you want is that consistency. You want to get in, you want to get out. You want to take $100. You know, if you take $100 a day, you're going to be walking away a pretty happy man, I suppose, towards the end of the year. You know, I think that's above average sort of wage than somebody working in like a normal retail job. You're going to be pretty happy with this. And obviously then over time, you start going from $100 a day. Next year, aim for $200 a day. The year after that, aim for $300 a day until you're up to $90,000 a day. You know, it's a series. It's going to take time. It's not going to happen overnight. But yeah, the main thing that you're obviously after is the consistency. And it's the thought process of, okay, I'm going to approach this in the way of thinking in a probabilistic manner. So it's like probabilities with consistency at the same time. I suppose you might think that's a little bit counterintuitive, because how can you have consistency if the outcome is absolutely random? Like, we have no way of knowing whether we're going to win or lose. So you might think, how can you have consistency if you never know whether that trade is going to win or lose? Like, how is it possible? Well, obviously the answer is you're approaching this off of a data set that you've collected the results that you have, let's say the 85% win rate, and you know that you're going to be trading this over 100 trades. You are then having consistency, even though the outcome of every trade is totally random. The outcome is totally random, because we never, ever know whether that next trade is a winner or a loser. We never, ever know. Even if we are spending hours upon hours upon hours on the analysis and everything is just looking too good to be true, you take the trade and it ends in a loss. You know, it's just one of those things, because all it takes is that one other person to think differently than you, and it invalidates the trade. But you're not going to be affected. You're going to move on to the next trade, and you're going to approach this in the consistency over time with the data set, with your strategy. That's it. That's the only way how you can expect to be profitable in this game. So, no other questions come in. So the next champion stream, this is where you'll get to see me live trading on stream. We'll jump onto the stream. We'll go through. Obviously, that's pretty funny. On the last week's champions live stream, you all knew that I was really interested in that $38,000 short, obviously to the weekly to the value area high. You all knew that I was really very interested in the short. But obviously on next Sunday, we'll be going through another plan. We'll be going through some live trades if we got some scalp opportunities during the stream as well. So the summary of tonight: a trading strategy / plan is needed. If you have, you know, let's say you've just joined today, you've just joined this week, maybe you've been in the group for 2 years, and you're just following along, but you don't have this strategy yet. Well, the simple answer is nothing is going to actually change or improve unless you actually put in this time. You need to get this strategy sorted. And again, it can be something simple. Take $1, take $1, next 25 trades. Take the same setup every time. Don't close early, don't close late. Stay to the original setup. Trade it for 25 trades. Don't start changing. Do not do this as well. Let's say you've agreed you're going to take the CC at the VWAP every time, and you're going to do that for 25 trades for $1. After 15 trades, don't adjust what you're going to do. Don't say, oh, I might adjust something. No, you got to trade for 25 trades. Like that's the deal here. You got to trade for the 25 trades. And then after the 25 trades, if it hasn't worked, then you can adjust. Then you can adjust because you'll have seen the data set after 25. You'll have seen your win rate. You can see what you can change and improve. You're not going to change it after 15, okay? Except you can lose every trade taken. This is the key. You're not going to find a magic indicator. You're not going to find a magic strategy. You're not going to find any sort of magic. The only way that you're going to be able to make money consistently in trading is finding an edge. That takes time, it takes dedication, and it does take study. So stick to the plan to the very end of the data set. Really simply, you cannot be changing halfway through. You just can't be. You can't. Yeah, you gotta stick it to the end. Basically. So this was what I wanted to cover primarily tonight. I suppose I'll move on to Bitcoin. And I'd really hope that this has helped you change your viewpoint of trading, of you've got to approach, you literally have to approach trading in with this viewpoint that every trade can be a loser. And when you accept that the outcome of every trade is a loser, you'll actually understand you do not need to know whether you're going to win or lose that next trade to make money. You know, you don't need to know what's going to happen in the market to make money, because you're approaching it, you know, I'm going to repeat it. You don't need to know what's going to happen next to make money, because you want to trade the probabilities over a large data set. So that next trade, you literally don't need to know what's going to happen, because you're approaching this in a probabilistic manner with consistency over time. And that's the wrap up. That's what you need to do. So I hope that has helped you get into that viewpoint, get into that mindset, and you're going to actually take this first steps. Because I do know there will be, with 100% certainty, people will watch this stream and they'll ignore everything that I've said. They're not gonna do what I've, you know, they're not gonna do what I've given a tip for, and they're going to continue losing money. But that's life. Even though people are in the contenders, in the champions to learn, they're going to disregard what I've said, and they're just going to be looking for to copy trade, and then they're going to wonder why they end up still losing money. Okay, that's just part of life. But I hope that you're one of the 5% that's going to fully take note of what I've said in tonight's live stream. You're going to adjust your mindset. You're going to do the challenge that I've given you of the 25 trades with the $1, and you're going to work out a really nice trading strategy. And then I hope you can, you know, really just hope that helps you. So that's what I wanted to cover tonight. So Bitcoin. Right then. So let's go. My opinion on Bitcoin. I'm really surprised we only had one question. That's pretty crazy. My opinion on Bitcoin, though, is that we're in a range, really. You know, still that range high, still that range low. Okay, really simply, we've gone from the low of the range to the high, to the low, to the high, back down to the low here. First thing that I would note is obviously on a bit of a, here we are on the 15-minute, we can really say we've got the high here, really put in a low, really put in a lower high, put in a lower low here, put in a lower high, put in a lower low, we've put in a lower high, really put in a lower low. So I'd say that this is your pretty big resistance at the moment. And at the moment, currently, we've just put in a high. So I'd say at the very least, you're going to be looking for this at some point to put in get a retracement, whether it's now or in a, this is going to retrace at some point. Pretty certain. And then you're going to be looking at, on this retracement, okay, are we getting bullish divergences, for example? Are we going to come to a VWAP? Because this is probably going to happen tomorrow. Are we going to come to the VWAP, which sits on the CC with some bullish CVD divergences? Guess what? You'd have a long criteria there. You might have a long setup that literally looks like this. You could have that. You know, again, it's too early. We don't have the data yet. But let's say we come down in the VWAPs here tomorrow, and you have that on the CC, and you then have bullish divergences, which you obviously do not have at the moment. Then you have yourself a long trade. Yeah, you have no divergences at the moment, so you know, you don't have that at the moment. But yeah, really simply, I'm kind of viewing this in the viewpoint of, okay, we're in a local downtrend. We have the point of control. Oh, yeah, that for me looks like a really big resistance then. That for me looks like a really big resistance. From this high to that point of control. That's our resistance locally. So you might want to say to yourself, okay, unless price gets above here, I'm going to take a bit of caution. Obviously, we're medium-term time frame also in a downtrend, really, because we've put in a high, we've put in a low, we've put in a lower high, we've put in a lower low. So we're in like a medium-term time frame downtrend here. And now we're actually also in a local downtrend here. So I think I would be taking a little bit of caution. If you were following in the chat earlier, you know I managed to get into a long literally at the lows. But just a small long position. And yeah, the way that I would kind of approach this here is, okay, this is our big resistance. If we can claim this resistance, well, that would look really bullish. And I think that the range still goes on here. I would say if we claim that red box, it's very likely that we can make our way back up to the higher range, maybe even an all-time high, to be fair. Okay, but if we are unable to claim the point of control of the range and we put in our lower high, well then why would we not expect this to continue the downtrend? That's what I would have to imagine that would continue. Okay, there's no reason for me to think the downtrend won't continue. We also have, obviously, within this downtrend, a Gartley, which is unfulfilled at the moment. We also have this. As long as we do not break this downtrend and reclaim the point of control, we can still be really saying, okay, D is still pretty likely at this moment in time. So yeah, that's what I'd be saying to myself at the moment on Bitcoin. If you missed the long earlier with me, then unfortunate, but I really wouldn't long where we are now. I personally wouldn't long here. I think it's too late now. That doesn't matter. Again, this is with the thing in trading. If you missed an entry, you're not going to beat yourself up. Don't spend all day beating yourself up that you missed the entry. You just got to be like, okay, I missed the entry. There's another one tomorrow. There's another one the next day. There's another one the next day. There's another one the next day. You don't need to worry about missing the entries because there's always another trade. So I wouldn't long where we are here, though. I really wouldn't. I'd say to myself, okay, if we claim the point of control, then I start getting interested in a long. I really wouldn't long here. We either reclaim resistance as support, and I think you go back up to the higher range, maybe even those all-time highs, or alternatively, we continue this local downtrend with our lower highs and our lower lows, and we continue down to point D, which is obviously around $32,000. If we get no reaction at point D, then I think that you're going to be heading down actually towards $29,000. That's where really I would be envisaging this goes. Either 32 if no bullish reaction at the Gartley. I'd say 29,000. And if no reaction off of that, I think 26,000. Those are my targets to the downside. If we're unable to claim basically the point of control. The point of control of this range is really important resistance at the moment. Again, I'm in a long, but my long was at a really good entry. So yeah. I still also hold some of my short position as well. So in that regards, I closed a lot of my short at the lows and I also took a long at the lows. But I still also have a remainder of my short open. Really simply, I want to see how this unfolds overnight. I want to see if we reclaim that point of control, really. It's pretty simple. On the larger term time frame, we had CC plus bullish CVD on the recent swing failure pattern that ended at 33. Was that a big long signal? Well, for me, it was kind of a long signal, yeah, because we were off the bottom of the range. So it's really simple. You know, if you were following around, I did enter the long here, and it was, for me, it was actually the simplest reason was swing failure pattern of the range low. And again, this is the range that I've been looking at now for the past like 5 days. So I was really aware that this was our low of the range while we were literally sat here. And I knew that this was the high of the range. I wasn't looking at this as the high of the range. This is the high of the range. This is the high range. While we were here, I knew this was the high of the range. And I knew this was the low of the range. I didn't think the low of the range was here. I didn't think the low of the range was here. I didn't think it was here. I knew that the low of our range was here. So when I've already knew where this low of the range, well, I thought it was highly probable that the low of our range was here. When we get this swing failure, when we start to come back above this, that for me is the entry. My stop loss was here. That's where my stop loss was. I had a really nice entry. But now obviously it's come back up into resistance. You know, you got to take profits because you still could ultimately see this lower high and fizzle down still. The point of control is pretty key. But yeah, basically the long signal for me was really simply the low of the range. Which of the VWAPs do you use the most on TradingView? Yeah, to be honest, I use the VWAP the most on TradingView. I take the most note of it on TradingView, to be fair. So this is the settings if you don't already have them. Session, HLLC 3, 0 offset. I like it on TradingView. Cool, so those are all the questions then. I was kind of envisioning a little bit more than that, but I guess Mike and Victor have answered a lot of them in the chat, which is really cool. So yeah, thank you all for the questions. I suppose that we'll end by saying, should you have any other questions, Obviously, you can always just come across to, in the Contenders section, the trading help. What we've been going through here, trading assistant's been doing a lot of nice answering of the questions. So yeah, should you have any other questions, you can literally just come across to trading help. You'll get all your questions answered. So yeah, like trading help is really, 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 really the best place to ask trading questions. And you know, any question is acceptable. So yeah, that's what I would say to everybody here. My viewpoint of Bitcoin is obviously that we're in a local downtrend here. We bounced off the bottom of the range. I personally wouldn't long where we are here. Yeah, my analysis on, I suppose, in terms of the viewpoint change that you got to go through in terms of your trading, I feel that's really, really massively key. You got to help yourself here. You got to help yourself. And that's the only way that you're going to be able to do it, by following that sort of challenge that I've given you for those 25 trade process. Try and make your way through this. I'll be surprised how many people won't be able to do it. But yeah, the ones that do, power to you. Hope you do well. As always, as soon as the stream ends, I'll be around in Discord. Should you have any other questions, feel free to ask. And have a brilliant evening, everybody. I will catch you over in the Discord. Thank you ever so much. And this video will be put on the website very shortly. So cheers, everybody. Thank you. Have a brilliant evening and goodbye. Thank you once again. Cheers.